You watched another trading video yesterday, you felt like you learned something, and then you went into the market today and lost money anyway. This keeps happening. You have been studying for months, maybe years. You can explain support and resistance. You understand risk management. You know you should not overtrade, and yet your account keeps bleeding. Here's the brutal truth nobody tells you. The problem is not that you need more information. The problem is that right now, in this exact moment, you're doing the thing that is keeping you stuck. Watching trading videos gives the illusion of progress without requiring real change. It feels productive, it feels responsible, it feels like you're improving. But psychologically, it often does the opposite. I have worked with over 200 traders who watched 500 plus hours of content and still panicked on live entries. Every single one of them had the same problem, and it was not their strategy. Over the next 30 minutes, I'm going to show you the invisible gap between what you know and what you can actually execute when money is on the line. More importantly, I'm going to show you exactly how to close it, not with another strategy, not with another indicator, but with the one thing no trading video has ever actually trained you to do. And if you stay until the end, I will give you the exact three-step process that transformed those 200 traders from chronic losers into consistent executors. Let me start by explaining why your brain is betraying you. When you watch trading content, your brain receives a dopamine hit similar to taking action. You feel smarter, you feel closer to success. Your identity shifts from beginner to informed trader. But here's the problem that ruins everything. None of that rewires how you behave when money is on the line. Trading is not won by what you know, it is won by what you can execute under pressure. This is why you can spend hundreds of hours studying, feel like you understand everything, and still watch your account bleed red week after week. The issue is not the absence of information, it is the absence of emotional conditioning. Think about it for a moment, really think about it. Trading videos teach concepts in a calm environment. You are relaxed right now, there is no risk, no fear, no urgency, your brain is open and receptive. You are learning, you are absorbing, you feel like you're getting better with every minute that passes. But here's what nobody tells you, and this is crucial. The market does not operate in that environment. The market operates under uncertainty, speed, and emotional pressure. And brain you have while watching a video is not the same brain you have while managing a live trade. Picture this. You are in a trade right now, price just wicked against your entry. Your heart rate spikes, your palms get sweaty. That calm, logical part of your brain that understood everything in the videos, it is gone, hijacked by your survival instincts. This gap is where most traders collapse. I call it the consumption to execution gap. It is the invisible distance between what you know in a calm learning state and what you can actually do when money triggers your survival brain. Information does not cross this gap, only emotional conditioning does. And here's the cruel irony that keeps traders stuck for years. The more videos you watch, the wider this gap often becomes. Let me explain exactly why that happens, because understanding this changes everything. Here's what happens when you consume too much trading content. One video says wait for confirmation. Another says enter early to get better risk reward. One says trade with the trend. Another says fade extremes for the best setups. One says risk small and protect your capital at all costs. Another says size up when you're confident in your read, because that is how real traders make money. You try to combine everything because you want to be thorough. You want to have all the knowledge. You build a mental framework that seems comprehensive and sophisticated, and then you enter a trade. Price moves against you by a few ticks, and suddenly multiple voices from different videos start arguing in your head. One says, hold, this is just noise, the setup is still valid. One says, cut it now before it gets worse. Protect your capital. One says, this is normal, every winning trade has drawdown. One says, this is a mistake, you should not have entered here, and in that moment you're not trading the market. You're negotiating with internal noise. Write that down because it might be the most important thing you hear today. You're not trading the market. You're negotiating with internal noise. This is why traders who consume the most content often struggle the most. Their minds are crowded with contradictory advice. They second-guess constantly because they have 17 different frameworks competing for attention. They cannot commit to decisions because every decision has a counter-argument learned from some other video. They feel smart, but they trade scared. And scared trading is losing trading. I have seen this pattern hundreds of times with the traders I have worked with. The trader who has watched 500 hours of content and still cannot hold a winner for more than 2 minutes because 3 different voices are telling them to take profit. The trader who can explain market structure perfectly but panics the moment price wicks against their entry. The trader who knows exactly what they should do but does the opposite every single time and then beats themselves up for lacking discipline. These are not stupid people. These are often the most educated traders in the room. But education without integration creates paralysis, and paralysis in the market means losses. So if watching more videos is not the answer, what actually is? Before I show you the solution, I need to explain something even more dangerous than information overload, something that might be the real reason you keep failing. Sounds like mindset guru nonsense, right? Stay with me because this has math behind it and real consequences in your profit and loss. Let me tell you about the identity trap that destroys more traders than any bad strategy ever could. There's a phrase I want you to tattoo on your brain: I am not a trader. I am someone who happens to trade. Most traders get this completely backwards. They make trading their identity. They introduce themselves as traders at parties. They think of themselves as traders when they wake up. Their self-worth becomes tied to their daily profit and loss like an umbilical cord they cannot cut. And this creates a devastating psychological trap that bleeds their accounts dry. Because when you make trading your identity, that means every failure you make is your identity. You're not someone who made a bad trade. You're a failure. If you fail, you are a failure. That is who you are at your core. This is not just philosophy or soft mindset talk. This has real consequences in how you trade every single day. When you lose money and trading is your identity, it feels personal. It feels like an attack on who you are as a human being. It feels unfair because you have put in the work. You have studied more than most people. You know what you're doing, and so you think, I know better than this. I should not be losing. I'm smarter than this. And that frustration fuels revenge trading, overtrading, and risk escalation. You start taking trades to prove something rather than to make money. You size up to recover your losses and your self-esteem at the same time. You hold losers too long because admitting the loss means admitting you were wrong about yourself as a person. Here's the twist nobody talks about. And this is where the psychology gets really dark. After watching hundreds of videos, you start seeing yourself as someone who understands trading at a deep level. That identity inflates your expectations beyond what reality can deliver. You expect to win because you feel informed. And when expectations are not met, emotions explode like a bomb in your trading account. Instead of humbling you, knowledge inflates expectations. And inflated expectations create bigger emotional reactions to normal losses that every trader experiences. This is why the trader who has studied for 2 years often handles losses worse than the complete beginner. The beginner expects to lose because they know they are new. The educated trader feels entitled to win because they have done the work. And entitlement is poison in the markets. The market does not care how many hours you studied. It does not care how many videos you watch. It only cares about execution, and execution requires emotional detachment that identity attachment makes impossible. Now I need to tell you about something that makes this identity trap even more destructive, something I call borrowed confidence. And I have never heard anyone else talk about this. Watching successful traders talk confidently creates a borrowed sense of competence that feels real but is completely hollow. You feel ready before you're emotionally ready. You watch someone explain their system with conviction. You see their results and their nice lifestyle. You hear them talk about their edge with certainty. And something happens in your brain without you realizing it. You absorb their confidence like a sponge. You feel like you understand because you can follow their logic. You feel like you could do that too because it looks straightforward when they explain it. So you increase risk too early because you feel ready. You trade live capital before your psychology is stable because you think you have got it figured out. You take positions sized for someone with years of emotional training because that is what the confident traders in the videos do, and when losses hit, they hit harder because you were not prepared for emotional impact. You borrowed the confidence without earning the calluses. You skipped the painful part where real traders built their resilience through thousands of losses. This is why demo success does not translate to live success, and this confused me for years until I understood it. The emotional cost is missing in demo trading. When you trade a demo account, there is no fear because there is nothing real to lose. Your brain stays calm because it knows it is a game. Your decisions stay rational because your survival instincts are not triggered. You follow your rules perfectly because there's no emotional pressure to break them. Then you switch to live capital and everything changes in an instant. Your heart rate increases the moment you click buy. Your focus narrows so much you miss obvious signals. Time feels different, slower during losses and faster during wins. The calm, logical version of you that traded demo so well disappears completely, and suddenly you cannot do what you did so easily on demo. The same setups, the same rules, completely different results. This is not a character flaw or a sign that you are not cut out for trading. This is biology. Money activates survivaluity in your brain that evolved over millions of years. The moment real money is at risk, your nervous system shifts into threat detection mode. It thinks your survival is at stake because to your ancient brain, losing resources meant death. And the version of you that watched all those videos is no longer in control. Your lizard brain is driving now, and it does not care about your carefully planned strategy. Now let me reveal an enemy that almost no one talks about in trading education, an enemy that might be destroying your account right now without you even realizing it. This enemy is not fear, it is not greed, it is boredom. That might sound strange, so let me explain why boredom is one of the most dangerous emotional states in trading. Boredom pushes you to act just to feel engaged. When you are bored, your brain desperately looks for stimulation because that is what brains do. Trading provides instant feedback that satisfies this craving. A click, a candle moving, your profit and loss changing. Your nervous system craves that input like a drug, so you take trades that do not fit your plan. Not because you do not know better, you know exactly what you should be doing, but because your nervous system wants action more than your logical brain wants profits. Videos rarely teach patience correctly. They talk about waiting for setups, about sitting on your hands, about being selective, but they do not train you to sit in boredom, uncertainty, and inactivity without forcing trades. They cannot train that. Only deliberate exposure and self-awareness can build that muscle. Here's the uncomfortable truth most traders avoid confronting. Many traders say they want consistency. They tell everyone they want to be consistent. They post about consistency on social media, but their actions reveal they actually crave excitement. Consistency is quiet. It is repetitive. It is boring. It does not provide dopamine spikes that make you feel alive. It does not give you stories to tell your friends about that crazy trade you took. It does not make you feel special or like a genius. Excitement does all of those things. So the trader unconsciously creates chaos to feed their need for stimulation. They overtrade because being flat feels boring. They oversize because small positions feel pointless. They deviate from their plan because following rules feels restrictive. Then they blame discipline and tell themselves they need to be more disciplined next time. But the truth is they never truly chose consistency. They chose stimulation disguised as ambition. If you have ever taken a trade and immediately known it was wrong the moment you clicked, if you have ever entered a position out of pure restlessness because nothing was happening, if you have ever felt relieved just to be in a trade even when the setup was garbage, you have experienced this. Your nervous system hijacked your trading to satisfy its need for stimulation, and here's the hard truth. No amount of strategy education fixes a nervous system problem. You can learn 100 more setups and your nervous system will still override all of them when it wants action. Forget psychology for a second. Let me show you the math that is currently killing your account, because numbers do not lie, and this will scare you in a productive way. Most traders think blowing an account is the result of one big mistake, one terrible trade where you lost control and bet the farm on some stupid idea. But that is rarely how it actually happens in real life. In reality, account destruction is the result of hundreds of small emotional decisions stacked on top of each other over weeks and slightly larger position because you felt confident that morning. A trade taken out of boredom because nothing was happening and you wanted some action. A stop moved a little further because you wanted to give it room to work. A setup forced because you wanted to feel productive and being flat felt like wasted time. None of these feel dangerous alone. Each one seems reasonable in the moment. You can justify every single one. Together they are lethal. Here's the math that should terrify you into changing. If you have a 5% loss on your account, you only need to make an extra 5.26% to recover. Not a big deal. If you have a 10% loss, you need 11.1% to get back to break even. Still manageable with a few good trades. But if you have a 50% loss on your account, you have to make 100% return just to return to break even. Not profitable, break even. You have to double your money just to get back where you started, And most traders in that situation do exactly the wrong thing. What a lot of traders fail to remember, especially when they are seeing their account go down, is that they will start sizing up and more aggressive because they want a big move back to the upside on their portfolio. They think they need to make it back fast. But the problem is, when they are more aggressive and they keep losing, they are only going to speed up the journey in which they fail at trading. They are not recovering. They are accelerating their own destruction while feeling like they are taking action to fix the problem. This is why defense is everything in trading. The market does not punish ignorance. It punishes instability. Small emotional decisions compound into catastrophic outcomes. And by the time you realize what is happening, the hole is too deep to climb out of. The traders who survive long enough to become profitable are not the ones who win big. They are the ones who lose small consistently. They are the ones who protect their capital like it is oxygen, because in trading, your capital is your oxygen. Without it, you cannot breathe, you cannot trade. You are out of the game permanently. And most traders suffocate themselves through 1,000 tiny cuts they barely noticed making. Pause for a second if any of this is hitting close to home. If you're feeling uncomfortable right now, good. That discomfort is your signal that something needs to change. That feeling in your chest is your wake-up call. If you're finding this helpful, hit subscribe now, because what I'm about to share next is how the 10% who actually make it separate themselves from everyone else. Most trading channels teach you what to do. This channel teaches you why you cannot do it and how to actually fix that at the root. That is a completely different kind of education. One that actually changes results instead of just making you feel like you learned something. So what do profitable traders actually do differently? Is it strategy? Is it some secret indicator the gurus are hiding? Is it information you do not have yet that they are gatekeeping? No. Here's the truth that will set you free. Professional traders are not better because they know more than you do. I know traders making millions who cannot explain basic technical analysis, as well as struggling traders who have watched every video on YouTube. The difference is that profitable traders trust their process with absolute conviction. That trust comes from execution, review, and repetition over thousands of trades, not from consumption of content, not from watching more videos, not from buying more courses. Is something a 7-figure trader told me that completely changed how I think about this game. Trading was hard until I realized I was overcomplicating it, and then it became simple. He said 90% of traders that fail simply overcomplicate trading. They learn hundreds of different strategies and concepts that do not work together. They are stuck in a constant loop trying to find the holy grail, the one indicator, signal group, or trading bot that will make them profitable without having to do the inner work. And they will waste years looking for something that does not exist. The holy grail does not exist. No one is hiding it from you, but a profitable system does exist. And the difference is that a profitable system is simple, personal, and trusted. Simple because complexity creates confusion under pressure, and confusion leads to hesitation, and hesitation leads to losses. Personal because what works for your psychology might not work for someone else, and you have to find your own fit. And trusted because trust only comes from evidence, and evidence only comes from doing the work yourself. The market does not reward effort. It does not care how many videos you watched or how many hours you studied or how badly you want it. It rewards between mindset, execution, and emotional state. Until those three are aligned, knowledge becomes noise. More information actually makes you worse because it gives you more options to second-guess yourself with when you're under pressure. Simplicity makes you better because it reduces the decisions you have to make when your survival brain is screaming at you. And fewer decisions means fewer opportunities for your emotions to hijack your trading. So let me give you the only 3 questions that actually matter when building your trading system. Grab a pen, because you need to write these down and answer them honestly. I applied this framework to a trader who was losing $8,000 a month. We asked these 3 questions, rebuilt his approach around the answers, and within 60 days he had his first profitable month. Not because he learned new information, but because he finally had clarity about who he was as a trader. First question, what type of trader are you actually? Not what sounds cool, not what some successful trader on YouTube does. What fits your actual psychology and life situation? Are you a scalper who wants to be in and out within minutes because you cannot handle the stress of holding? A day trader who closes everything by end of day because overnight risk keeps you up at night? A swing trader who holds for days or weeks because you have a job and cannot watch charts all day? This is about radical self-honesty. Some people cannot handle overnight risk. The thought of price moving against them while they sleep creates so much anxiety they cannot function. Those people should not swing trade regardless of how profitable the strategy looks on paper or how many gurus recommend it. Some people need action. They cannot sit and wait for hours without going crazy. Those people should not trade systems that require extreme patience regardless of how good the backtests look. You need to be brutally honest with yourself about who you actually are, not who you wish you were or who you think you should be. Second question, when exactly do you trade? And I mean specifically, not vaguely. One consistently profitable trader told me this: I trade from 9:30 a.m. to 11 a.m. Eastern every single day, and that is it. No exceptions. That specificity matters more than most traders realize. Because if you're trading your strategy at 9:30 in the morning, and then randomly you decide to trade your strategy at 3 in the afternoon because you were bored or saw something that looked good, the market conditions look completely different. The amount of data you have at 3 p.m. compared to 9:30 a.m. at market open is night and day. The volatility patterns are different. The volume is different. The conditions of the market will change the outcome of your strategy and your results completely. Most struggling traders have no specific trading window. They trade whenever they feel like it, whenever they have a few minutes, whenever they see something that looks decent, and then they wonder why their results are inconsistent despite having a good strategy. Your results are inconsistent because you're not testing your strategy under consistent conditions. You're applying one strategy to 20 different market environments and expecting the same results. Third question, what single instrument do you trade? You do not want to be consistently changing the instrument you are trading. Pick one thing and master it completely before ever considering adding another. Stocks, futures, options, crypto, Forex. It does not matter which one you choose. What matters is consistency over months and years. Each instrument has its own personality, its own rhythm, its own tricks and traps. When you spread yourself across multiple instruments, you never develop deep intuition for any of them. You remain a tourist everywhere of becoming a native somewhere. These three questions seem simple, almost too simple, but I guarantee most traders cannot answer them with specificity. Go ahead, pause this video and try. What type of trader are you? When exactly do you trade? What single instrument do you focus on? If you cannot answer those clearly, you have found one of the core reasons you are not profitable yet. Now let me show you the math that actually sets you free once you understand it. The math that profitable traders understand instinctively, but struggling traders never learn because they are too busy looking for the next strategy. There are only two ways accounts die. Either you lose more trades than you win, or you lose too big when you do lose. That is it. Every blown account in history comes down to one of those two problems, sometimes both at the same time. Let me give you a concrete example so this becomes crystal clear. Say you trade for a month and you win only 5 days out of 20 trading days. You lost 15 days out of 20. Obviously, you're not going to be profitable with that kind of win rate. No strategy can overcome losing 3/4 of the time. Now let me give you a completely different example that confuses most traders. Say you win 18 days out of 20. That sounds incredible, right? 90% win rate. You should be rich. But here is the catch that destroys people. On the days you win, you make $10. On the 2 days you lose $200 each. So your 18 winning days made you $180 total. Your 2 losing days cost you $400. You end the month down $220 despite winning 90% of the time. Most traders who see this kind of month think they just had bad luck. They do not realize their entire structure is broken. Winning does not matter if your losses are bigger than your wins. This math never changes. This is why profitable traders understand balance above everything else. They know how to balance their risk to reward and their win rate into a combination that produces profits over time. Your risk to reward is simply how much you lose and win per trade. For every dollar you are willing to risk, how much do you make when you win? Your win rate is simply how often you win your trades. If you take 10 trades and win 5, you have a 50% win rate. Here's the key insight that changes everything once it clicks. The higher your win rate is, the lower your risk to reward needs to be to make money. The lower your win rate is, the higher your risk to reward has to be to become profitable. You can win only 30% of your trades and be extremely profitable if your winners are large enough. You can win 80% of your trades and blow your account if your losers are too big. One consistently profitable trader put it this way, and I think about this every day. I'm not looking for a super high 90% win rate. I'm simply looking to enter my trades using a mechanical strategy, and I'm looking to make $200 for every $100 of risk that I'm putting on. That is a 2-to-1 risk-reward ratio with a 50% win rate and a 2-to-1 risk-reward. He is profitable over any meaningful sample size. He does not need to be right most of the time. He just needs his wins to be bigger than his losses on average. And that mathematical clarity removes so much psychological pressure from every individual trade. He is not trying to predict the market perfectly because he knows he does not have to. He is not stressed about individual trades because he knows some will lose. He knows the math works over time if he just follows his rules with discipline. This is the freedom that comes from understanding the numbers deeply. You stop needing every trade to work out. You stop taking losses personally as failures. You start seeing each trade as just one data point in a long series of trades, and that emotional freedom allows you to actually follow your rules. Now, let me teach you how to process mistakes without spiraling into self-destruction, because how you handle mistakes determines your entire trading career more than any strategy ever will. One trader shared something with me that changed how I think about failure forever. He said, whenever you make a mistake, your spirit and the way we are as human beings will give you that red light. That red light will come on and be like, do not do that, like a warning signal. It is just there to say, do not do it again. That is its only job. But us as human beings, we hang on to it. The problem is we hold on to it way past its usefulness. And when we hold on to it, we make it a part of our identity and our story about ourselves. That red light feeling, that pang of guilt or regret you feel after a bad trade, it is not there to punish you. It is information. It is feedback. It is trying to help you learn and improve. But most traders torture themselves with it for hours, days, sometimes weeks. They replay the bad trade over and over in their minds. They beat themselves up about what they should have done differently. They let the mistake define their day, their week, sometimes their entire self-image as a trader. Here's the reframe that changes everything once you internalize it. Every mistake and every road bump is for you, not against you. It is basically the universe saying, hey, this is what you need to fix. I'm clearly pointing out the problem to you. Here's your lesson. A mistake is not evidence that you are bad at trading or that you will never make it. It is information about what needs work. It is a gift disguised as pain. It is your curriculum. The traders who blow accounts are the ones who either ignore mistakes entirely and pretend they did not happen, or drown in them and let them destroy their confidence. The traders who succeed are the ones who acknowledge mistakes, extract the lesson quickly, and move on without carrying the emotional weight into their next trade. You made a bad trade today. Good. Now you know something you did not know before. You overtree of boredom this week. Good. Now you know boredom is a trigger for you that you need to manage. You moved your stop and got blown out. Good. Now you have painful evidence that moving stops does not work, and you will remember it forever. Each mistake makes you sharper if you let it teach you. Each mistake makes you weaker if you attach your identity to it and carry it around. The choice is yours every single time. I want to share something with you that might sound strange, but captures the emotional journey of trading better than anything else I have ever heard. And I want you to really sit with this because it might be exactly what you need to hear today. One trader who went from blowing multiple accounts to consistent profitability described it this way. The process to becoming successful is almost like a hamster wheel. We know what we should be doing, but we then do not do it anyway. And when we fall into it, it gets harder and harder to get back up, to keep being hopeful when evidence keeps piling up against us. And one thing I have realized is that the pit of sorrow is infinite. You can keep going down and down and down forever. There is no bottom to how bad you can feel. But the sky of hope also is the exact same way. It is infinite. There is no ceiling on how far you can rise. The pit of sorrow is infinite. You can keep descending into despair, self-doubt, account losses, and identity destruction. There is no bottom. You can always feel worse. You can always lose more. But the sky of hope is also infinite. You can always climb higher. There is no ceiling on your potential, no limit to what you can achieve. The question is not whether you will face the pit. Every trader does. I did. Every profitable trader you admire did. The The question is whether you choose to keep looking up at the infinite sky or keep staring down into the infinite pit. Both are always available to you. Both are always pulling at you. The traders who make it are not the ones who never fall into the pit. That is a fantasy. They are the ones who fall in, sometimes repeatedly, and choose to climb out anyway, who feel the despair fully and choose hope anyway, who fail spectacularly and keep going anyway because they know the math favors the persistent. This is not motivation. This is not some feel-good nonsense. This is math. The only way you fail permanently at trading is if you stop while you still have capital, and say another outcome is just a step on the journey. So long as you keep going with discipline and learning, the sky remains infinite above you. Now let me tell you about the paradox that defines successful trading. It sounds completely backwards when you first hear it, but it is absolutely true once you experience it. Stop trading for your ego, start trading for your future, and here's what that actually means. Success is not a destination you arrive at someday. It is not when you hit a certain number in your account. It is not when you get 3 consecutive months of profitability. It is not when you make your first $10,000 or quit your job. Success is stepping into the identity that already is successful right now, today. It is operating out of abundance rather than scarcity in every trade you take. When you're operating out of scarcity and you view yourself as somebody who is struggling and desperate and needs the market to give you something, you're putting that label on yourself, and that label manifests in your trading. You trade desperate, you trade anxious, you trade like someone who needs the market to give them something to validate their existence. And the market can smell that desperation from a mile away. It takes from those who need and gives to those who do not. That is nautical nonsense. It is practical psychology. Desperate traders make desperate decisions. Here's the paradox that successful traders eventually discover after years of struggle. You will feel the most successful when you feel like you are doing the least amount of work. Because you're not striving and pushing and forcing, you're just arriving to the destination calmly. This contradicts everything hustle culture tells you about success. Work harder, grind more, put in the hours, wake up at 4 a.m. But in trading, more effort often means more mistakes, more forcing of setups that are not there, more overtrading to feel productive, more fighting the market instead of flowing with it. The traders who are actually crushing it are often the ones who trade the least, who sit on their hands most of the day waiting, who take 2 or 3 perfect setups per week and then close their laptops. They are not stressed and anxious. They are not glued to screens for 12 hours a day. They are calm, patient, present, and profitable, not because they are lazy or do not care, but because they understand that effort without alignment is just energy wasted, and alignment feels effortless, you find it. So how do you actually close the consumption to execution gap that we have been talking about? How do you move from watching videos, which we have established is mostly useless for real change, to actual conditioning that makes you profitable? Here's the truth that changes everything. The goal is not to eliminate emotion from your trading. That is impossible, and anyone who tells you otherwise is lying. The goal is to understand and regulate your emotions so they do not control your behavior. Professional traders feel fear, they feel doubt. They feel frustration and excitement and greed. The difference is they do not let those emotions dictate their actions. They feel the fear and follow their rules anyway. That skill is trained, not learned from a video. It comes from repetition under controlled risk over hundreds of trades. It comes from reviewing not just your trades, but your emotional responses during those trades. It comes from building trust in your process through evidence that you gather yourself. It comes from reducing position size until your behavior stabilizes, and you can follow rules consistently, not from another video, not from another course, not from another guru. Let me be very specific about what this actually looks like in practice. You emotional regulation by reading about it or watching someone explain it. You develop it by trading small enough that your nervous system stays calm so you can actually practice good habits. By executing your rules even when it feels uncomfortable, because that is where the growth happens. By reviewing not just your trades but your emotional state during those trades so you can spot patterns. By slowly increasing size only as your behavior stabilizes and proves itself. By building evidence over hundreds of trades that your process works so trust becomes automatic. This takes time, this takes patience, this takes the willingness to trade small when your ego wants to trade big and make money now. Most traders refuse to reduce their position size because they want money immediately, but size is exactly what keeps them trapped in the emotional hijacking cycle. You cannot learn emotional control while risking amounts that trigger your survival brain and shut down your logical thinking. You have to earn the right to trade bigger by proving you can handle smaller sizes with discipline first. And most traders skip this step entirely because it is not exciting, because it does not make for good stories or impressive screenshots, because it feels like you're moving too slow while everyone else is getting, so they stay stuck. Trading sizes that trigger their survival brain every single time, making emotional decisions they know are wrong, and blaming discipline instead of recognizing the structure was broken from the start. Here's the shift that changes everything and ends the cycle permanently. The moment you stop asking what video to watch next and start asking how you respond to pressure, everything changes. The moment you focus on how you behave when you're wrong, when you're bored, when you're afraid, and when you're confident, you finally start addressing the real issue that has been holding you back. Most traders never reach this point of self-inquiry. They stay trapped in consumption forever. They keep believing the answer is external. One more strategy will fix it. One more indicator will give them the edge. One more mentor will finally explain what they are missing. One more video will make it click. But the answer is internal. It always has been. It always will be. Trading exposes the gap between who you think you are and how you actually behave under pressure. And that gap is deeply uncomfortable to look at, instead of confronting it honestly. Many traders avoid it by learning more. They stay busy consuming content. They stay distracted by the next shiny strategy. They keep believing mastery is one more piece away. But information without integration is just mental clutter. And mental clutter becomes internal noise. And internal noise becomes losses in your account. The question is not what do you need to learn next. The question is what patterns in yourself do you need to recognize and change? What emotional triggers do you need to become aware of? What stories about yourself do you need to rewrite? This is inner work. It is not glamorous, it does not make for viral content or impressive social media posts, but it is the only work that actually moves the needle on your results. So what do you actually do tomorrow when you wake up? Not next month when you feel ready, not after you watch a few more videos, tomorrow morning. Here's the hard truth that separates the 10% from everyone else. 90% of traders simply never take action on what they learn. They will watch this video today. They will feel like they learned something important. They will agree with everything I said. They will be entertained and engaged. And then they will go back into the markets tomorrow and lose money and not follow anything they learned because they do not implement anything. They consume, but never integrate. Let me give you 3 specific actions that you can start immediately. I'm not giving you these to be nice. I'm giving you these because they work. First, backtest one single strategy over 100 trades minimum, not 5 strategies, not 50 trades. One strategy, 100 trades. Go back through historical charts and mark every setup according to your rules. Track what would have happened if you followed your system perfectly. Build evidence that the system actually works before you risk real money on it. This is not exciting work. Nobody is going to applaud you for it. But it is the work that builds trust in your process. And trust is what allows you to follow your rules when your emotions are screaming at you to deviate and do something different. Second, review your previous 50 trades, but not the entries and exits like most traders do. Review your emotions and your internal state. What were you feeling before you entered each trade? What were you feeling during the trade as it moved? What were you feeling when you exited, whether it was a winner or loser? Journal this honestly without judging yourself. You will find patterns you never noticed. Maybe you overtrade when you're bored in the afternoon. Maybe you revenge trade immediately after losses to make it back. Maybe you cut winners short when you feel anxious about giving back gains. These patterns are invisible until you deliberately for them, and they are running your trading results until you recognize them and address them. Third, and this is the hard part, commit to doing this every single day for 1 year, not for a week until the motivation fades, not for a month until something shiny distracts you, not until it gets boring and you want to try something new. 1 full year of consistent daily review and improvement. If you do these 3 actions every single day for 1 year, I can almost guarantee you that your trading performance will transform beyond what you think is possible. But the problem is 90% of you simply will not take action. You will agree this is good advice. You will think about doing it. You will tell yourself you will start Monday, and then you will not because it requires discipline and honesty and facing uncomfortable truths about yourself. That 90% who do not take action will still be struggling a year from now. They will have watched another 500 videos. They will have tried another dozen strategies. They will have spent more money on courses and signal groups, and they will be no closer to consistent profitability than they are right now. The 10% who actually do the work will be completely transformed, not because they are smarter or more talented or luckier, but because they did what others were not willing to do. They chose disagnation. Which group are you going to be in? Here's the final truth I want to leave you with, and I want you to really hear this because it might save you years of struggle. Blowing accounts is almost always a sign of impatience with time. Most traders want years of experience compressed into months. They want mastery without the repetition that builds it. They want confidence without the scars that earn it. They want the results of a 10-year trader after 6 months of effort. But the market does not accelerate growth to match your expectations or your desires. It does not care about your timeline or your bills or your dreams. It humbles you until you slow down and respect the process. Every single successful trader I have ever studied went through a period where they felt like they were making no progress at all, where the same mistakes kept happening over and over, where they wondered if they would ever figure this out or if they were just not cut out for trading. The difference between them and the ones who quit is they kept going anyway. They accepted that the timeline was not theirs to control. They focused on what they could control and released what they could not. They got comfortable with slow progress because they understood it was still progress. The traders who eventually stop blowing accounts do not become smarter or discover some secret. They become calmer. They trade less frequently. They risk smaller amounts. They wait longer for better setups. They accept missing trades that do not fit perfectly. They accept small wins instead of swinging for home runs. They accept boring days as part of the process. They stop fighting the market and start managing themselves, and that is when everything changes. Not dramatically overnight, not with fireworks and celebration, but permanently and irreversibly. This is the part no video glorifies because it does not make good content. There is no excitement in the transformation, no viral moment, no dramatic turnaround. Just a trader who finally understands that blowing accounts was never about lack of knowledge or bad strategies. It was about lack of self-regulation and emotional conditioning. Once that clicks at a deep level, everything changes. Not instantly, not magically, but permanently. And that is when the cycle finally ends. Stop watching videos to feel like you're making progress. Start tomorrow with these 3 steps, or stay stuck forever. That is the choice in front of you right now. Leave a comment and tell me which of your emotional triggers is destroying your trading. Is it boredom driving you to overtrade? Fear of missing out making you chase, revenge after losses pushing you to size up? Something else you have identified. I read every single comment, and I want to know what you are specifically struggling with. Because naming your demon is the first step to defeating it. See you in the next one.